Hi, everyone, and welcome back to Home Loans with Hart. And I'm Robin Hart with the CMG Home Loans. We've reached the end of a very active month of May, and today we're looking back at apparently what is day 91 of Iranian crisis or war or blockade, whatever you want to call it. Strait of Hormuz situation, doesn't matter. And we're going to discuss what it means for your home buying means. Without further ado, let's start with the latest numbers from the Mortgage Nuggets. Now, these are average numbers from over 7 days from over 200 lenders across the nation. So they're not rate quotes, but good indicators of where things are at. Now, the 30-year fixed average at is 6.51%, according to Freddie Mac. Now, also, our 15-year fixed is at 5.875. And FHA buyers and 30-year average is sitting at 6.24%. All are slightly elevated, but the 30-year is slightly down. That means that, quite honestly, 30 years kind of hedging its bets, but everything else is slightly elevated. We're seeing a lot of volatility, so keep in mind, just kind of rerun the numbers. And of course, here at CMG, we do have a one-time pre-float down available for you if you want to go ahead and lock. Now, the big question, where are we going? Now, median mortgage payments have ticked up, but that's kind of an average over millions and millions of homeowners. And with single family housing starts falling 9% in April, our supply remains kind of a challenge. Now, that might not be what you're actually seeing in the marketplace because you'll have houses sitting on the market for about 90 days. Here's the thing, 90 days is a normal timeline. COVID was not normal, selling a house in 3 days. 90 days is a long-term average, which is normal, but people are anxious and want to get going, so they kind of worry about that. Also, builders have unsold inventory. They aren't kind of ramping up any new construction quite yet. They want to see a bit of a frenzy. So unfortunately, with rate cuts now likely off the table from the Fed, for the rest of 2026, we kind of expect rates to stay in the higher range and for the foreseeable future. So I'm not seeing builders just go out there and build massively, anticipating a swarm of buyers. They are making some adjustments. We are hearing about them curbing square footage and amenities or making certain amenities no longer base items, but actually making them upgrades to build in the price, which means prices are becoming elevated. Now, gas prices, there is a bit of relief at the pump. WTI crude oil has decreased from over 100 per barrel to approximately 95, 98 as of a couple of days ago. And I think even today it dipped below 90. So while this is a good sign for inflation, the market remains on edge due to the broader geopolitical climate. And it's too early to say whether or not these low prices are really going to stick around long term, mostly because we're all like Charlie Brown in the football with Lucy, keep telling us it's on, it's off again. Hard to say. Now, currently, they've recently announced there is a tentative deal in the Strait of Hormuz. The reasons for that dip in oil prices is the tentative 60-day ceasefire. Now, and diplomacy headlines involving Iran and U.S. negotiations are ongoing. So keep in mind, though, it is vital to remember that it's not a permanent solution. This is just another 60-day extension of a ceasefire, and it's a window of relative calm while broader multi-front negotiations continue. Now, the hope is that the ceasefire includes opening up the Strait of Hormuz, which means oil and other products should flow. Whether or not that stays consistent and all the way through a 60-day deal, nothing has been consistent with any part of this process. Okay, now back into mortgages, the future of FHA. Looking ahead, there is some significant chatter regarding the future of FHA loans, specifically the possibility of a 1% down payment. Now, that's not for everybody, but that would be specifically for first-time homebuyers, which are people that haven't owned a home in 3 years. Now, research and data from the Urban Institute suggests that this could be a major move to expand accessibility for first-time homebuyers in a high-rate environment. Now, keep in mind, it would require a lot of approval from CFPB and FHFA, but you know what? I think that they're going to want to try and boost the housing market with that. All right. If lower rates aren't happening in our very near future, I think that's a way that they might boost it. Now, other industry trends, agent attrition. Now, we are seeing a shift in the workforce between the higher rate environment and the current buyer-seller gap, where sellers outnumber buyers for 43%, and we are seeing more agents exit the industry. So this is important. We've also discovered that most home buyers and home sellers work with the first agent that they speak to. So for those of us staying in, it's about being the expert your client expects and being the expert in your local market. More importantly, it's about casting a wider net, which means larger use of social media, AI presence, and doing classes. So, also, AI in your career. Are you worried about AI taking your job? Most agents I talk to are a little bit concerned about it. You're not alone. I also am concerned about it. Adoption of AI in the mortgage industry and servicing has jumped from 50% just a couple of years ago to 38% last year to over 50% this year, which means lenders are increasingly using AI, but also for loan analysis and approvals to cut costs. Those costs you might be asking about, well, those are the humans that analyze the data, submit it to processing, submit it to underwriting, and those kind of things. So the key isn't to fight the tech, but to be the human expert that AI can't replace, especially when AI can ruin deals. And we have exposed where AI has ruined deals before. Now, positive news of the week. This is kind of cool. We've been talking about it for a while. Blue Moon Month. Now, here's the thing. Blue Moon of the month. We had a flower moon on May 1st. And this Sunday, May 31st, marks the blue moon, which is the second full moon in a single solid month. It's a beautiful and rare sight that we won't see again until 2028, but it also means everybody's going to be acting a little bit kooky on Sunday, so you might want to stay home. Who knows? All right. Now, meme of the week. Our meme of the week is MLS photos versus reality. You should check it out because, quite honestly, I hear this all the time. Photos on MLS don't look anything like the house that they're looking at. So the listing photo shows a bright and airy living room, and the actual home looks like a set from a horror movie. Yeah. So this is why you need a professional eye on the ground. So check out your realtors. All right. Now, the best time to buy. So when is the best time to buy? As the saying goes, best time to buy was yesterday or even 10 years ago. But the second best time is when you are financially ready. So don't try to time the market that even the experts are kind of divided on, because just ask them. They'll be going in opposite directions no matter what. Now, thanks for watching Home Loans with Hart, and I'm Robin Hart, and I'm here to help you navigate the complex market. Let's get social. Follow me on Instagram, Facebook, YouTube, the artist formerly known as Twitter. I'm Robin Hart with Home Loans with Hart team, where we're here to help you build wealth every single day through the financing of homes. And if that's not enough, we'll catch up with you again next week. Have a great weekend, y'all.